Hi, this is a video about how I scan in the morning for EPs and SIPs. So yesterday, if you saw my Twitter, I had bought TGTX of the morning. It was an SIP. And a lot of my trades, you'll notice I end up buying EPs, sometimes in the pre-market itself. So recently I bought on the EP day in the pre-market itself, and I bought SC right at the open. Actually, I think in the pre-market as well over here, and this is a position that I'm still holding on to and might even add today. So I get a lot of questions on how I scan for these EPs and SIPs, what the differences between them are, and how do I go about trading them. So in this video, I'm going to do a brief overview of that process. So the first thing I do in the morning is just scan the stocks that are trading in the pre-market. So you want to pick the source as pre-market. And I use a very simple scan. C greater than 1, so the price is greater than 1. The average dollar volume traded is 1 million. So it's already traded $1 million worth of shares in the pre-market. And either the stock is gapping up 3% or it's gapping down 3%. And if it's gapping down 3%, then the price is greater than $10. And the reason I have this filter of price greater than $10 for the gap downs is because there's a lot of penny stocks and dollar stocks that gap down very frequently, but those gaps are not very meaningful. And it's also really hard to short something that is less than $10, simply because your spread would still be 5 cents. And it's hard to put a tight stop. It's mathematically harder. You don't have much room for the stock to fall and for you to cover it. So that's a very simple scan. Basically, I'm looking for stocks that are gapping up or down 3% and have some kind of liquidity. Then all I do is go through this list one by one. The first thing I want to see is technically if the stock is making a breakout. If it is, and if the chart looks interesting, then I go onto Finviz and find what the news for that stock is. And for something to qualify as an EP or SIP, both have to be there, the technical and the fundamental. So Lucy, this one is actually breaking out from a technical point of view because it's a recent IPO. It's been in a downtrend here. And now it's just starting to make higher highs, higher lows. It's starting to turn around and go in an uptrend. Also look at the amount of volume it's already traded in the morning. This is much higher than its average 50-day volume. In fact, close to its IPO day volume. That is not insignificant. So this is a stock that I would want to go and research, find out what the news is. And then if it's something genuinely strong, then I would want to trade this today. So let's check. This is finwiz.com. Yours might look white, mine looks black because I have the dark mode on, just because I stare at screens all day and I don't want to go blind. So it's just a life hack that you can use. Okay, so April 11th, here we are. Lucy launches the first ChatGPT-enabled smart eyewear. Okay, so this is good to know. We're going to type this here. And I'm actually glad that we came across something like this because this is one of the nuances of checking the news and trading stocks like this. Now, in the current environment, ChatGPT and AI are one of the most hot sectors. A lot of these penny stocks are just going to put out fake PR news wires saying using these buzzwords like ChatGPT or AI and just claim that they've come up with a new product or that is AI enabled or are exploring getting into this sector. And usually in these kinds of cases, it's not a genuine news. It's just something that gives the stock a 1 or 2 day pop. There's a lot of retail traders just get super excited by this, think it's legit. It's going to be some ChatGPT glasses and start buying it. And then that leads to a short squeeze. Shorts get trapped in and it goes up for a few days, but eventually it comes down. Now, whether or not in this case, this is genuine news or it's just fancy PR, no one knows. My bet would be on the latter. So even if I traded something, it would be a quick day trade. I would sell into strength, start getting out at 2 hour, 3 hour, and not want to hold this until it makes a continuation pattern. So for today, I'm still going to watch it. I'm starting it. And this is something that will be part of my watch list at the open. But now that I know the quality of news, which is very susceptible, I'm going to trade it as a short-term trade and not a position trade. Okay. Now, the next one, Zfox. So this one is in a downtrend as well, and it's trying to break the downtrend for the first time. The volume today is pretty high, 4.6 million on an average of 165,000. So that's huge, way higher than even the IPO day. The action in the 5 market looks very constructive. So this is a typical bull flat that we like to see. It's worth going into this and checking what the news might be on the stock. So I'm going to go here, Zfox. Okay, Zfox partners with Google Cloud to disrupt phishing attacks and malicious URLs. So this is genuine news. This is an example of something that is genuine news. And how do we know that? Because it's partnering with Google, which is a real established company. This is not something they can lie about. And if Google has vetted them as a partner, then chances are that the company really knows what it's doing and can add some value. So this is another stock that we would want to see at the open. Could be traded either intraday or held for a longer term position. And I'll go through at the end of this scan what my plans are with these stocks. Okay, Weight Watchers. So Weight Watchers is a really, really old company, like been there, done that. Used to be a fad at one point, not really doing much anymore. It would need a true EP for me to get interested in this, start doing something completely new and different. And this doesn't look very exciting. It already had this big day on huge volume, 80 million shares traded, and it came right down. So this doesn't give me much confidence today. Plus the volume is very average. It's just so-so. So I'm not even going to waste my time looking at the stock, trading it, or finding out what the news is, because the chart does not interest me. Okay, BNRG, this seems to be one of those thinly traded penny stocks. You'll find a lot of these in the movers list. Your job is going to be to filter them out and not give them the time of day. When you see something as ridiculous as this and a huge upper wick yesterday, I simply just move on. I have no interest in trading this volatility. Tupperware, just a dead cat bounce from yesterday's reverse EP, so to speak, or negative EP. KMX, it's breaking out a little bit, but the volume is very little and the stock is in a huge downtrend and would need to take out this high for it to go in an uptrend. So I'm not interested until it takes this out. So all I'm going to do is put an alert here in case it goes berserk today. Shockwave, this is getting, this is getting no volume either. So not really interested. And we can see this on the 5-minute as well. It's just very thinly traded. Usually I like stuff that's being bought hand over fist in the pre-market and almost looks like it's trading in the regular market because there's such a big news that people just can't wait to buy it and there's a frenzy. That's what you want to see here. JFBR was another one of these funky stocks that gapped up yesterday, just chopping around today, no interest. I already set an alert on this one at this price yesterday. I can set it again to show you guys. Because if it takes this level out, then that's the level at which I would be interested in trading it. That's when it would be in an uptrend. This one, another one of those thinly traded funky stocks. Stay away. Nothing to see here. Just a random gap up. Mara is just following up on the Bitcoin run-ups from yesterday. So if you saw my trades on Twitter, I took a position in this yesterday, and obviously I still have it. And with Bitcoin going up today, this one's gapping up. So nothing much to see here. The big move was actually yesterday. This is just a continuation move. So these are also the types of stocks that you would need to filter out. Boil. So here's the thing with natural gas. It's usually always going to be there on the gappers list. And that's because natural gas is so choppy and so volatile, especially in the after hours. And it's also one of the most difficult instruments to trade. It's actually called the widowmaker on Wall Street because it's just led to the death of so many portfolios. So if you want to trade natural gas, good luck to you. It's something that I learned my lesson on last year. And when I analyzed my trades, I actually saw that not one of my trades in natural gas had been positive. So as a rule, I just stopped trading this instrument. And from what I know, I'm not the only one. Riot capping up for the same reason as Mara, just continuation on Bitcoin. And you would also need to look at the R wall, right? Here, the R wall has just declined, like it's 2, which means it's 2% of the daily volume. So these are not really big movers or shakers that we want to focus on, but we'll just go through them anyways. But the main ones are usually just the top 2 or 3. So Carvana getting a bit of a bid here. What I do like about the stock is that we have this clean pivot here, and I'm going to set an alert on this line. So if it breaks out of this, since it's also making higher lows, this could get interesting. It does have a lot of catalysts recently. UNG, again, natural gas. Billy, Chinese stocks. Okay, so this is another type of stock that's going to feature a lot on these lists, and that is ADRs. I believe this is an ADR. Even if it's not, this is a good time to explore ADRs. Say, for example, Baba or KWeb or Pinduoduo. ADRs are basically stocks that are listed in the US market, but they primarily trade on a different exchange. So these are Chinese stocks which trade on the Shanghai exchange or the Hong Kong exchange. You'll also find a few European stocks. So they usually gap up or down because they have traded overnight in their parent market. And when the market opens in the morning, they move that corresponding amount by gapping up or down. These are 90% of the time, they're not actionable. It's only if the gap up or down is on earnings, like in this case, then there's something to look at. But if it's just gapping up 1%, 2%, or 3% based on how much it moved in the, say, Hong Kong market overnight, then there's nothing really for us to do. And these are, again, a group of stocks that you're going to have to filter out. Snow, nothing to do here. Nothing here. Cold again, natural gas, beware. And the last one is Mona. So biotechs on the short side, again, is similar to trading natural gas. It's one of the quickest ways to lose your entire account. As a rule, I never ever short a biotech overnight. The news in biotechs can be so unpredictable and so wild. If you get a gap up of 100% or 200%, which is not uncommon in the US for biotechs, you could lose way more than you planned to lose on that trade, and it could wreck your account. So if you are not a sucker for unhappy surprises and don't want to wake up in the morning just seeing a deep red hole in your portfolio and don't want to risk that ever, I would say just don't short biotechs overnight. So this is not something that interests me, and I'm going to stay away from it. Okay, so we just found two today that are potentially interesting, Lucy and Zfox. So I'm going to go through my plan of how I'm going to trade those potentially. The first thing I'm going to do in Lucy is set a few levels, look at what the important levels in the stock are. So one that I see is here. Look at the volume on this day. It was really high. So that itself makes this high a resistance level. And the next level would be here. This candle also traded on really high volume, and so did this. So these are three levels that I would watch to see how the stock behaves at. Now, if I wanted to go long in this, I would trade the open range high. So what that means is after the first 5 minutes, I will look at what candle is formed. And once it breaks the top of that candle, I would enter. So I can just draw this, for example. So if this is the opening candle, once it breaks this and makes a new high, that is when I would want to enter. This level. Okay. So the stop would be at the low of day. So it would be at the bottom of the first candle. The volume has to be really high too. Hold on, I'm trying to get rid of this. And mouse. The volume has to be really high too in the first 5 minutes, and the price action has to be constructive. So say this was the 1 minute chart and the market had opened. This is very constructive, where buying comes in the first 1 minute, buying comes in the second minute, buying comes in the third minute. We have good volume, and then there is a low volume pullback and it's surfing the VWAP. That is very bullish. That is when I would enter it. Now, if instead in the first 5 minutes the stock is chopping all around or opens high and just keeps going down, so I can try drawing it again. Say it opens and just keeps going down, or it just opens and is chopping around. That is not constructive action. That's not bullish action, and that would not make me want to get in on the first 5 minute high. Okay, for Zfox, I would do exactly the same thing. I would look at the stock. If the action in the first 5 minutes is bullish, I would get in on the 5 minute high, put the stop at the low of day, and trade it just the way I plan to trade TGTX yesterday. So I can show you that. That's a good example actually. Here. This is what TGTX did yesterday. So first look at the daily chart. It had a jump in sales. That was the catalyst. First 5 minutes, this was very constructive action. We got huge volume. Look at the volume here. I can make it much bigger so you guys can see this properly. Yeah, we had huge volume coming in. Look at this bar compared to all the other bars. And right when it took out this level, that's when I entered, and the stop loss was at this level. And then if you want to see what it did the rest of the day, I can show you that as well. It just kept going higher and higher. So this is a good blueprint for what I'm looking at right at the open to see if I'm interested in the stock or not. And now let me show you what it did on the 1 minute, so you can see why I thought this price action was constructive in the first 5 minutes. So here, we opened, huge buying volume came in, it went up. We had one bar down, but then it immediately reclaimed that, held the low of day, second bar up, third bar, inside bar, so didn't mean much. And then in the sixth bar, it took out that high. Here, this one. So overall, it just kept going up and the volume was also constructive and it was above the VWAP. So this action in the first 5 minutes made me want to get bullish. This is exactly what I want to see today as well in Lucy and Zfox. And the R wall has to be high. So the R wall yesterday on TGTX, when I entered in the first 5 minutes, was 900%. That is something that is super important, and you can't enter something that has low R wall. That immediately disqualifies it as a stock in play. So this is yeah. So this is my plan with the 2 SIPs I found today. Just one thing that I want to clear up, what the difference between a stock in play and an EP is, because a lot of people tend to use these terms interchangeably and they're actually quite different. So a stock in play is just a stock that you think will make a move today and maybe for the next few days. It's got a minor news and it's more of a swing trade or a day trade. An EP or episodic pivot is something that is it's a pivotal change in the entire narrative of the company itself. And the catalyst is so strong that you expect that change to continue. You expect that trend to continue for a really, really long time. So on, for example, I would call an EP. It just came out with blowout earnings. No one expected it to be, the sales to be so strong. It had margin expansion. It was a new brand. This was something where I expected the trend to just keep going for a few months, maybe a few years, for it to start a new uptrend. SE, similar story. Completely neglected stock. No one was looking at it for the last 2 years almost. And the analysts actually predicted a loss in the earnings, and then it came out with a surprise profitable quarter. So that I anticipated would start a new uptrend that could last at least a few months. Lucy, as of now, I think of it as an SIP because these PRs can be so fishy. It might prove me wrong and turn out to be an EP, in which case it's even better because we get to trade that stock for a much longer time. But until proven innocent, I'm going to assume it's guilty and it's just an SIP and just something that traders will be all over today. And so there'll be a lot of liquidity, and most likely these SIPs are stocks that we all forget about in a couple of days. Zfox could be an EP, but I'm not qualifying it as, or I'm not looking at it as that simply because it's not broken its downtrend yet. Once it does, and once it closes the day really strong, and if the volume and the buying still keep coming in, then I would revisit it at the end of the day and maybe change its designation as an EP. And if it is an EP, then it goes on my earnings winners list. And then I'll be watching it every day to try and take a bull flag breakout trade. So hopefully this gave you some insights into how to scan for EPs, SIPs, what the differences are, what a lot of the different nuances are when you have to look at ADRs, or you have to look at penny stocks, or you have to judge what the quality of the PR is. This is something that's not, it's a skill that you're not going to pick up overnight. It comes with a lot of practice. You just keep looking at these every day, go through the news and FinWiz, see which kinds of catalysts are likely to work, which kinds of stocks give you a range in the day, which ones don't. And then you'll develop a sense of what works for you and what doesn't. Let me know if you have any questions about this, or if you found any other EPs today that I missed, or any SIPs today that I missed. Oh, and the last thing I would remind you of is EPs are very rare. In the last quarter, I only found 2 or 3 that were interesting. So don't come in thinking you're going to find an EP every day. You're likely just going to find it once or twice a month at most. SIPs, on the other hand, like Lucy and Zfox, you'll find 1 or 2 every day. So once you master how to trade these, it can make you money on a regular basis. And it's really good for providing cash flow to the account. So this is a skill worth developing and worth investing in, but it takes time, and be patient. Okay, thank you.